Welcome to today's video. In today's video, I'll be leveraging list squeeze price actions and then do a top-down A to Z analysis on how I put this into my trade for the past years. And also, if you're not familiar with volume profile, you can check out my previous video. I did part 1, part 2, explaining details what is volume profile and how you can leverage into your trade, including the low volume nodes, high volume nodes, and then also point of control, volume area high, volume area low, on what they are. And also recently I posted a video regarding how Fabio used a similar type, and pretty much this is the best way to use volume profile, to be honest. And then if you have order flow, you can add that on top to see any order, actual live order coming through. So jumping into a quick overview of, if you're not familiar with volume profile, essentially volume profile is what we have here. So in this, we have within each session, these are session volume profile that have drawn out on my chart. You can see on each day there's a volume profile drawn out once the day is completed, and you can see within the yellow line, that's the point of control, and then outside the shaded area in a lower part of the shaded area is the volume area low, volume area high, and then whatever's in between is the fear price. So in highlight, why is volume profile important and how can we leverage that into our trading? First is we understand that majority of the price will be trading in between the volume area high and volume area low. That is where price is deemed fair, right? When we say imbalance or balance, within the 70%, so point of control, and then within the VAH and VAL, the volume high, volume area low, this is where the price is balanced because both seller and buyer view this as a fair price. But once it's moved out of this area, so 30% of the time you'll spend either on the top or on the bottom, these are essentially imbalanced price. So what typically price does is it will move out and then bounce back in. Once it's balanced, we'll spend time in there majority of time, move outside and then bounce back in into point of control, bounce around, move out, and then come back in. So by knowing this, trading, as we all know, is not a guessing game, right? If you're guessing, then you're gambling. We're playing risking our money or trade based on high probability setup. So just based on number, right, using volume profile, it's a statistic game, right? If you know 70% of the time price will be spending inside here, you do not want to try to trade within this price, because within this zone, most of the time, what you'll see is the price will chop around, right? This is where a lot of traders, if you spend here, you do not know where the price, let's say if you're short in the middle, you don't know if it's going to go up or down. To be frank, you don't know what the price is going to do. The best type of setup is look for some sort of confirmations outside of these imbalance area that is going to try to balance into the balance area. That's right. So with this given in mind, when you're taking a trade and using the volume profile, you can leverage these setup to increase your probability, because it means 70% of the time you will be right that the price will move back in, 30% you're wrong that price will continue and create another volume profile. So we'll get into that another day, but not today. So in this week's session, I think it's a great example, since this week has been ranging for the past 2 weeks. And volume profile, if you trade it, it should be an easy trade for you this week. You can kind of see where you can take your entry based on the high on the extreme end, or the low on the extreme end. So okay, let's dive right into it. Let me erase all this. Okay, so let's dive into, this is Monday, so December 8th. This is the Monday that we're looking at. Let me go back, bar replay, bar Monday. Okay. Now let's dive in on how do I draw my volume profile in this case. So on this day, on the 8th, you can see we are in the upper range. So one thing to point out is using volume profile, you can basically leverage it as a tool. I mean, you can also see it within the price that is making higher high, lower low, higher high, higher low, higher high, higher low, right? It's kind of, you can see this is biased towards uptrends. And using volume profile, you can using leverage the point of control. You can see the power control point of control is there stepping up, indicating that we're continue uptrending. So the bias will most likely be uptrending, or instead of trying to short at the bottom, that will be not the ideal trade. You will either short on the top or you buy at the bottom. That will be higher probability trade based on the current trend. But we don't know until we take a look, but this is something you can have in back of your head, but something I'll kind of show you here, right? So when you have these type of ranging day, what you can do is you can take from this end, the all these 4 day for the past week, right? Where you can take the whole week as well, so you can have the weekly profile. The reason I didn't include Monday is this is all the way down here. I don't need it, but I foresee if the price does retrace all the way down here, this is all I need, right? This day. Technically, you can really just have this 3 days is enough. So let's work with this 3 days. So this is previous Friday, Thursday, Wednesday price action, and you can combine these volume profile, right? So within each sessions, you have it, right? Now I combine all 3 days of sessions. And next thing what we're gonna do is we see all these high value nodes area, and also the value area high. So this blue line, this is essentially marking where the value area low is below, value area high is below. So currently we're in the value area high. So what does that mean is I want to look for trade that will rebalance into here. So I can mark out the sessions over here, okay? And then we can see using the session, this align with this point of control. And then I'll mark this out over here. This is the POC as well to here. And sometimes I will align it towards the wick part, because that's where if a price does move, it will typically move towards that area. So there's a point of control aligned to the wick as well. And then on the bottom here, there's also another value area nodes here. It's kind of stuck. So you can, from here, you can see within these price level, there's a lot of action going on. And what that means is typically once it reaches spot, we'll expect some sort of actions. But in cases, that's for example, I don't think happened this day, but in cases, let's say right now the price is doing this, right? You can see a rebalance. And on this day, you grab this liquidity, right? If the price slides through these area with high value nodes, it means what that means is there's a lot of transaction going through this day. If it slides through like butter, typically what you can expect is the price, once it tap into here, is going to reject, right? You can use this zone as a leverage, saying, okay, I want to look for some sort of confirmation at this level for continuation lower. Okay, now let's jump into lower time frame. So this is a 1 hour time frame I'm drawing out. I think that already passed my, I didn't zoom back enough. So this was my entry around here. Okay, so in this day, right, we can see this green box is what we have drawn out, right? And then we also can confirm these liquidity in the time frame. So if I go 30 minutes, we can see these liquidity is grabbed. We left this liquidity for futures. But what I'm looking for is I want the price to rebalance back into the point of control. So my entry was here. So I took a short. Once there's a change in state of delivery, so on this candle down up close candle, this down close candle and these ones close outside of it, I can confirm there is a change in state of delivery. And what I'm targeting is this, right? So if I go to 1 hour, what I'm targeting is this POC. So you can see, let me draw this out. This previous state point of control is my target. And then also it's within that high value nodes. I can expect some sort of action to happen here, right? So let's play out. So you can see right away it tapped right into a point of control and then it reject, right? It will become a support level. So what the reason I'm saying into here is, why didn't I target all the way down here for all these liquidity? Yes, I can target those, but you gotta keep in mind that we're currently uptrending. typically what might happen is price will balance into the volume area high, and then it could continue higher, create a new profile. So for example, on this day, right? So if you take a look on these days, let me just use this. What happened here? It happened to this volume area high, and then it didn't even continue to grab this liquidity, right? It formed a new volume profile, daily session profile, right? It could be ranging, but it also could respect, and that's how you can tell if it's trending or not, right? So you can take some partial here and then have some running order all the way down here. That's up to you, but I took all my position off for a 1.6. It wasn't a huge trade, and then that's it for Monday. And you can see we continue respecting this price actions, this price level, and then once it slides through it, and what did we say before? If this slides through it, didn't spend too much time here, this become resistance, right? And you can see become resistance, it didn't go up, and then it went lower, right? All these zones that we marked out is not a coincidence why when it reached level, the price slowed down, right? And once we want to see, if we want to continue lower, we want to see the price to slice through this level, right? And this is going towards the PM session already. Okay, so let me zoom in into a little bit faster into the next day. So as you can see, this is already going to the next day, but just to highlight here on day one, on Monday, using volume profile, you can see price reacting to here in the lower time frame, right? We can spend some time here. It respected it. Once it slides through it, this becomes resistant level. Once it tap into these level, right, that we have drawn the 1 hour, going back, these high nodes area, high nodes area essentially just mean these peak, right? You have these peak. So let me kind of draw out these peak, right? These are high price level that there's a lot of action that is happened transaction in the past. So what that means, and based on auction theory, is based on either buy side or sell side, whoever once it gets squeezed, whoever didn't cover for, if you're shorting, they're gonna cover once it come back down, reduce their risk, right? Same thing once there's whoever is buying, once pass through their order, they get stopped out. Once they come back up, they're gonna sell their order, right? They're gonna minimize their risk. So all these stop order will be sitting here, majority of them, or take profit order. So you can expect price to behave, have some sort of reaction. If it doesn't react, you can expect once it bounce back into lowest level, it will reject, right? So once you bounce back, reject, continue lower, and then you can see price slow down, accumulate, going back up, going down, but it never passed it, right? It never break the level. Okay, all right, gonna move a little bit faster now. Now we have that in mind. So let me erase all this. So we're gonna move forward with throughout this whole week using what we just did as a example. Okay, so same thing here. What I'm gonna do is leverage these all the way. So I'm gonna include Monday as well, and then you can see I'll draw out over here up top. This is a high nodes area. And then what I typically like to do in the ranging market is when I draw these zone, I mean it's only roughly, I want to look for these wicks. I want to grab these wicks, as much wicks as possible. So it's similar if you back then you traded like drawing support and resist line, you want to find as many line you can to the line. But here I also leverage daily session point of control. So you can see this lined up over here very well, right? And then you have the bottom here, right? At the value area low. So this is where the entry, the price level I'm interested in at. If we go into the lower time frame, this is the value area low. So sorry, this, so you can see it. I'll draw these up here. This is the high, this is the low. And this day is a very simple trade as well. So this day, the liquidity I'm looking at is these two that is being grabbed. So the reason there's no trade on here yet is because there is liquidity down here. Okay. So once the liquidity also tap into here and also aligning with my volume area low that I have drawn out, this is where I start looking for entry. Once there's a change of state of delivery over here, I long it at this candle, right? And then my stop is here, and my target is all the way up here, this high. So this is Asia high. This day took a while to hit. Dang, it's like 2 hours. Yeah, so my entry was around 9:41, and then 11:41 is when I got out, roughly 11:35. So this was a 2 hour trade, a little bit long to hold, but you can see why this level I drew is important, right? Let me just minimize this. Once respecting here and have changed the state of delivery, right? What I'm looking for is push through this level. This is a volume area high, high nodes that I'm looking for. If the price do decide to push up forward, it should not move back down into here, right? It should not move lower. So my risk, this is my already known risk. I want this to push. Once it push up here, then this should become support, which it did. Once this breaks, becomes support, and all the way up here, it's just smooth sailing. At that point, it's a little bit slow, but you can see it slowly go up there. So that's it for this day. This day is very straightforward. Next day into next. Okay, so same thing. Leverage into here, and then this is the nodes continue to hold, and then you have the volume area lows continue to stay as well, and then you have the high. Okay, so here on this day, you can see the area that you have shorted is in the pre-market over here. I was late into this day. Technically, the best trade is once it rejected into here and grab this lower south side liquidity, rejecting this value area high area. Your price could be entered at up here. So this will give you upper better price entry, and then your target will be on this day all the way down here. Let me double check on where I exited. I remember on this day. So okay, so the value area low is moved up to here, so that's where I exited. My exit was here. It is low, and then ideal entry is here. But when I jumped on, I was not here. I was jumping on around 9:30. After 9:30, I was in here. So it took some time. So my entry I took was a little bit down here. So once the price break again, bounce back up, this is where my entry. And then my stop all the way up top is a little bit wider stop, but this still give you a 2.5 RR trade. And as you can see, these area we highlighted again, once it slides through it like butter, what you can expect is price gonna bounce up. It's gonna spend some time in the point of control of this area, right? And then continue lower. So you can see on this day, this is the point of control. It's gonna spend around here like we draw before. The price typically will move, this based on this day, right? You can see price move out, inside, outside, inside, rebalances inside, outside, into point of control, outside, inside, 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 and then point of control, lower, and then point of control, right? So you can see majority of the time that if you short up here, a long down here is gonna give you a better chance of winning into your probability. Okay, into the next. So this is Thursday. Thursday is the day I took the loss. So moving my point control, I'm gonna minimize this. I don't need all of this. Typically, I'll graph 3 to 4 days. Because if you get too many of it, right, you're gonna see sometimes. This is still clear. The two highest nodes is gonna be, 3 technically. It's gonna be this one, this one, this one, right? So you have this one where you can see a lot of these are wicks are coming out, and then you have this one. So I already have one here. So this one, and then you always have the value area low down here, and then you have the point of control here. Okay, now let's jump in. This is the day I took a long where I shouldn't have. So this bottom line is the near the valuing area low, value area low portions, and this is the value area high. So this is the low around here, and what I took was the long here. Once I saw price respecting this, what I'm expecting is the price continue to range on this day, right? And then my entry was here, and my stop was at this low, and then my target was all the way up here. So this is a 3-hour trade I'm looking for. It's a clean trade, right? So we can see the price is respecting it. I'm expecting the price to move back up into here. But on this day, what I failed to realize is this wick here. This kind of is a kind of telltale sign, or sometimes it could move, you don't know, right? It's hard to know when you're trading at this area. You don't know when the price will respect the point of control, when will not respect point of control. This is where you kind of need an order flow to see the order coming in, and then see if you have large buyer of seller, or bid and ask getting dry up here. So the buyer is just not pushing through. But here you can see once you're looking in point of control, and you can see once the tap into point of control is respecting it, this is where kind of you can either take a smaller size, or wait until the point of control is broken, and then rebalance into here, and then take a trade around here, target up here to reduce your size. I mean, your risk and reward will definitely take a hit, but your probability probably will increase in this case. But on this day, I failed to see all these wick up here is also rejecting a point of control, which that means is this is essentially still a ranging zone that I traded in the ranging zone between point of control and value area low, that we don't know in this case that price is going to go back up or go down. And in this day we went back down, and I didn't find any trade pass around. I mean, on this day the price move up way too fast. I did not have any entry that I feel comfortable for taking on a long trade. But if you did take a long trade, it makes sense to take it somewhere down here and then target up here. Okay, so this day it was a loss, a small loss of 1 RR for a 3 RR win trade. So it's a good loss. Now moving on to the last day. So I'll just end this and erase everything. So on the last day, which is on Friday, selling area high, and you can see all the wick, point of control lined up on here as well. And then point of control, there's 3 point of control all lined up with POC as well. This is the big POC within 1, 2, 3, 4, roughly a week and a half of data. And then you have the valuing area low down here. So I'm gonna grab all these wicks so you can see in the pre-market, in the London session, it balanced here. So this is the area I'm interested in at. And dive into the 1 hour. So this is where I learned from the previous day lessons that what you can take is there are 2 setups you can take. Once it push into the point of control, right, and rejecting, and then there is a change in state of delivery, you could take the trade here and then target down here for these low, right? For this low that was created by London, Asia going to London. So this is a 6 RR trade, very clean trade. Or you can take this trade as well, which is the same trade as the previous day, Thursday, where I took a loss. Is once you tap in here and then you see it's continue rejecting it once, and also grab this liquidity, your entry could be around here. Target this, either this high to be safe, or you can target this high, in this case it doesn't matter, and then target the low, right? Target this low for a 1.3, where you can just target a 2 hour trade as well, or it's around here. But either way works for this day, because this day was just a sell-off that got melted through. The key level that you could look for is this level that you can target, and also here, that which it all got hit. So all these liquidity is something that you can target. And then if you look at the previous days, the realistic hitters are these point of control, right? That you can target. So if I'm going back down to 1 minute, you can see the liquidity you can target is this. It'll give you a 2.8 RR trade, or you can target all the way down here, which is a 4-hour trade. But these trade are what you can take this entry either using change in state of delivery or market, where you can take this one where there's a market structure shift and then tap into sweat more liquidity, and then there is also a inverse fair value gap. So there is a inversion over here that you can take in the 1 minute. Okay, this is it for this week analysis on how we leverage volume profile into our day-to-day from A to Z top-down analysis, how you can merge. Key highlight here is you can merge sessions especially when you have ranging data like this. When this is a color, the point of control is very, very, very close. You can merge them right into one single point of volume profile that give you an idea where is all the volume nodes, high volume nodes and low volume nodes, because sometimes viewing just one session by one sessions, it's hard to see where are the key level to look for. So I always use this to help me look for key levels. So merge them, you can see the key level is this one, this peak, and this peak. And obviously there is the value area high, that this is always a key interest over here that I marked out, right? You can see, even just marking that, you can see price outside, move back in to point of control, back in, outside, back in, outside, all the way down, slice right through it, but it'll go back in again, right? These are the day where you can see volume profile shines a lot, and it also give you high probability trades into your setup. So again, volume profile is very, very great tool. Instead of stop guessing where is actually imbalance sitting, you leveraging volume profile actually show you the exact price level where the imbalance is sitting and where the price is gonna move from imbalance to balance area and why it does so, right? Having that mechanics understand will help you out in trading instead of start guessing. And then also when you enter trade, you won't start FOMOing on taking the profit early, or when you're in the loss, you close out the order and take the loss, or also holding on losses too long. Volume profile and order flow kind of give you a deeper dive into more confidence within your trading and also your strategy. Right, that will be all for today. If you have any questions, leave it in the comments. If you have any additional topics or strategy you want me to go through, leave it in the comments as well. Leave a like, subscribe, stay safe, and happy trading.